Welcome to GP Bullhound Tech Thoughts. Today's the 4th of March, and we are here with Inge Heydorn and Nejla-Selma for our weekly market roundup. Today, they will talk about software, semis, the legacy of COVID on the market, and more about GP Bullhound's Global Technology Fund. Over to them.
Thank you very much. And let's start with it's not easy to focus on tech in these times with a terrible war going on in Ukraine, but I will still give you some update on the market and so on. And if you look at the marketplace, it's really tough out there. The market is getting hit on all sides. We're down another 3% today in Europe Friday when we're recording this. Interest rates are down to levels where we saw them in the beginning of the year, but the war will definitely also create some inflation. So going over to the results this week then. On the software side, they've been really strong, I would say, across the board. So Salesforce, good numbers, Workday, really good numbers. And I would argue the same for Zoom, Snowflake, and Viva, but we had a little bit of different effects there. And I'll go into that a little bit in a few seconds. Starting with Salesforce and Workday, across everywhere, good numbers. The only nitpick in Salesforce was the guidance for the margins going into 2022 is slightly lower than expected, given that Slack has a bigger impact with a lower margin. But that's just helping the top line instead. So on the EPS side, it's nothing. But Workday clean across the numbers. Both when it comes to Viva and Snowflake, we had some effects due to changing how they do the billing, and thereby you have a weaker start of the year, although full year guidance looks really good. In Snowflake's case, it's more about how you upload the data, and thereby it's a little bit cheaper in the short run for people. But on the other hand, they'll probably upload more data, more capacity, which they pay for. So that compensates in the second half. So that's that. Going over then to the COVID hangover and that problem on the software side. If we start with that, you have some numbers coming in, guidance to low double-digit growth, which is clearly below market's expectations of 16%. But on the good side, enterprise is growing, Zoom Phone is growing, while the negative is the well-known fact that small companies 10 and below, SMEs, are really declining quite quickly as the clients. Going on to more general then when it comes to the COVID effects, we had guidance that is quite low from Zalando hitting them. We had Digital yesterday coming out really bearish statements on how the effects will hit them and the SMS marketing and so on they are helping companies with, which is a little bit of Twilio and Cinch inside of it, but really bad guidance. And then you have big commerce in the US also feeling these effects. So still we're getting hit by companies struggling with negative effects coming out of COVID relative to expectations. I think we are although getting less and less of this, and we're getting a better understanding where the growth is. And going back to the software side, they are seeing accelerating growth in terms of Salesforce and Workday. Going on the semi side then, we had Broadcom numbers last night, strong across the board. So hyperscalers, the cloud solutions, and so on. Even industry and telecoms are strong. So they expect now next quarter coming, and we'll see accelerating growth for them because of chip supplies, but also demand. The underlying demand is continuing to be really healthy for them. And the last thing from the semi side is that our big bet is really the same capital equipment names. And we now saw the ICI Insights CapEx table for 2022. So really doing the same job as we do, putting together CapEx forecasts for all the big suppliers of semis in the world. And most of them are going for very aggressive numbers. You already talked about TSMC, but you have all the player twos like TI and Global Wafer and UMC and so on. So very healthy demand in 2002. I think it's even going to be a little bit too high. So I wouldn't be surprised if you see quite a lot of these things being pushed out to 2023 and 2024. So we expect very healthy demand for the coming years. So those were the things on the sort of data point side and the result side. Over to you, Nejla.
Okay, so this time we're taking another turn. I'll just do a short introduction and update about one of our own funds, more specifically GP Bullhound Growth Technology Fund, which is a long-only UCITS fund. We are running portfolios with market-leading companies, where we're trying to find market-leading companies with strong positions in different market segments in technology. So what we do is try to find trends within technology where we think the market will change over the next 4 to 5 years. Even though it's been a very, very volatile on the market the past months, especially for technology stocks. I mean, we've seen a lot of downfalls. Our growth technology fund has been able to perform really well. Our year to date is around minus 7.2%. And our performance for February was down slightly, minus 2.5%. And I mean, our Sharpe ratio for the last 3 years has been around 2.6. Based on this data, I think we've been performing really well. Thank you for this time and see you next week.